Hi, everyone. I'm joined by Adam Taggart once again. Adam, how are you doing?
I'm doing great, Mike. It's great to be back here with you. And look, it should be the slow days of summers, but there's a lot for us to talk about here. Specifically, some very important data that you've uncovered recently in your research. And as much as I want to get to that, first, I guess we got to talk about the elephant in the room or the elephant on the plane. The world has been tracking Speaker Pelosi's trip to Taiwan. She just landed a few minutes ago. The world didn't end. But anyways, this is a little bit crazy. What do you think about all this, Mike?
Well, I think it's nuts. I consider myself a citizen of this planet, not, the follow the leader mentality is the big downfall of mankind. I am a proud liberal in the sense of classic liberal, libertarian, before the word liberal was stolen by the progressives, I guess you'd call them, or whatever. I just can't understand why we always have to elect somebody to tell us what to do. These people that Nancy Pelosi and almost every politician, there are a few humble ones that want to try to do good, but everybody is in this for the power. And you've got people in China and in Russia and the United States now, and they're just gang leaders. These are just people. We have the local gang here, and it's I used to live in Los Angeles, and back in the 80s, you had the Bloods and the Crips, and there was gang wars going on and stuff. This is the same thing. It's just organized crime taken to the next level. We have to have this popularity contest every 4 years and then elect somebody to tell us how to run our lives. I can't tell you the resentment that I have every time I have to go through customs. And there's some guy there that just doesn't know crap with my passport, looking up at me, asking me questions, trying to intimidate me. Screw him. I just don't understand why people can't leave each other alone. Now we have China making these threats, and we've got Pelosi, and I don't understand why she is such a big deal. Speaker of the House, this 80-year-old woman that, what is the big deal here? And then the people of Taiwan, they don't want to have anything to do with China. They just want to be Taiwanese. And so let them. I don't understand any of this stuff. That's the thing. It's beyond my comprehension. How do you feel about it?
Well, look, I'm not a geopolitical strategist. I know enough to understand that China doesn't want a senior U.S. official going to Taiwan because it validates Taiwan's sovereignty, which China doesn't accept. So in my mind, the thing I'm having trouble wrapping my brain around is, why stir the pot? I mean, we're poking the Russian bear to the point where the Ukrainian invasion happened. That has sent shockwaves across the world that we are still figuring out, how to react to. Certainly made life difficult for everybody. And do we really, at this point in time, want to go and start poking yet another big player on this chessboard who is an ally but isn't happy with us? We're beginning to cozy up more to Russia. You would think we would want to be sort of smoothing things over with China at this point, yet we seem to be inflaming them. I don't see the reason to do that right now. And what I worry about with all this is, I think, and this is foreshadowing where we're going to go with your data, Mike, I think that the global economy is highly unstable right now. And I think, if anything, we need to be pulling together to say, okay, how do we get things more stable? We're all going to have some tough times ahead, even if, no other bad things happen. How can we collectively work on improving our collective, prospects here? To me, this feels just kind of like kicking a hornet's nest right when we need the exact opposite.
Yeah, we've been poking the Russian bear, and now we're poking the Chinese tiger. There was this meme recently with, we'll put it up, but it says, "Here we go." It's 2022. It has a tiger in it. You'll see it when we release the video. But yeah, the world. Do you know who the Flying Wallendas were?
God, you
This
know,
was
I've heard
it
the
was a
name, but I'm
high
not familiar.
wire act, and it was an entire family. And they do this thing where they build a pyramid of people, and they fell one day. And I think two of them died. It was just uh, tempting fate too much with this human pyramid walking across, balancing on chairs and stuff or whatever they did. It was a circus act. And that feels like the world economy today. We have this circus act world economy that is balanced on a knife's edge, and we keep on piling on stuff on trying to keep it balanced. And now we're doing this upsetting of the cart with poking the Russian bear and the Chinese tiger at the same time. This just feels really, really bad.
Well, it does. And now I want to head into the data that you uncovered because we're talking internationally right now, which is very important. But even
But first, let me mention one thing about China. In that Zero Hedge article, it says that Beijing is floating economic retaliation against the United States as well. And so this could be like, 50% of the chips in the US, or no, it says chip manufacturer TSMC has over 50% of the market share of chips. But they could restrict daily necessities that the US imports. And then there's another thing in here. Okay, bonds. Mainland China has reduced their debt holdings to under $1 trillion for the first time in 12 years, with Chinese analysts suggesting that treasuries themselves are risk assets. So US treasuries, China is now seeing this, some people, as a risk asset. And that is, I've since 2009, I started giving these presentations called the death of the global dollar standard. And I'd talk about the nails in the coffin. And we are getting close to something really big happening in the world. And it's not going to be pretty. You and I were talking about before the video started about the difference between recession and full-blown depression. And we could be going into a spot where this is a full-blown depression, which leads us to the data. So go ahead and lead into that.
Well, I'll just tee it up, but you've just done a great job of explaining why this is such a timely topic, which is that just domestically inside the US, there's something going on that suggests that the economic contraction that we may experience here in the US could be a lot more powerful than most folks are expecting. That by itself is a big force to deal with, and you'll explain that in just a second. But if on top of that, you basically have our biggest trading partner start disrupting trade with us, shutting off buying our treasuries, whatever, that's going to be a wild exacerbation of what could already be a very big problem. So can you explain what that very big problem could be based upon what you found?
Okay, but one thing I do want to say is that, this we are tempting fate here, and we could get these things very often run out of control, and we could get dragged into the US being involved in a big war with with China or Russia. I just don't understand why we keep on doing this. But what I want to point out here is the rate of how the rate of change of the federal funds rate, because there's never been anything like this. So here is a chart of the Fed funds rate going back to 1954. And, you see how the Fed lowers interest rates, and they create an economic boom that then starts to turn into a bubble, and they start raising interest rates because of that bubble until they pop the bubble. And we are now trapped in this recurring nightmare that we can't wake up from with the Fed. We're riding on this bus with the Fed at the wheel, drunk and out of control, and they slide to one side over, and then they overcorrect, and we slide to the other side. Well, are we going to crash this time? The rate of change of this last, if you look at today's Fed funds increases, the last couple of months, and you compare them to when Janet Yellen was raising rates, and then Powell took over, and it's interesting. One Fed chairman starts the rate increase, the rate cycle, and then leaves, and another Fed chairman takes it over because it's happened the past 2 times. But you look at the angle of that slope, and she ran into a problem, and the markets went into something they called the taper tantrum. If you look at the rate increase before it that Alan Greenspan was doing, he got about 2/3 the way up, handed over the reins to Ben Bernanke, and it topped at like 5.25%, and it broke the highly, real estate had become highly leveraged. Alan Greenspan didn't even see when he dropped the rates to reflate the stock markets after the NASDAQ crash. That was the reason for dropping rates, and he accidentally created the real estate bubble. This is the problem when you allow any small group of human beings or any one human being try to manipulate something as big as the global economy. The free market is the billions of people on this planet making trillions upon trillions of transactions, and that automatically is adjusting all of these things. Interest rates should be something set by the free market. Alan Greenspan created the real estate bubble accidentally. And then when he tried to slow down and bring us in for a soft landing, he handed over the reins to Ben Bernanke, but raising the rates with the mortgage-backed securities and the collateralized debt obligations and the things that they didn't fully understand crashed the entire world economy when we went into the global financial crisis of 2008. And it was all the misinterpretations by the Federal Reserve that caused this. And then you look, the slope on Janet Yellen's, and then the slope on today, which brings us to the next chart. And this is the alarming one. This is the rate of change. So what I did here was I did quarterly information instead of daily, weekly, or monthly. So this is quarterly. And what it does is it takes the last rate changes and puts them together. And then I selected percent change. And so this goes back to 1954. And, we one time exceeded a 100% change. And here you have a 525% change. There's never been anything like this. And, you used to work with Chris Martenson pretty closely. And Chris teaches about logarithmic versus linear, and people do not think logarithmically. We don't have the ability to react logarithmically. A 1% rate hike is very different if you're already at 10% than it is if you're at 0.1%. It's like, spending 10 cents when you only have $1 is different than spending 10 cents when you've got $100 in your pocket. And so there is this big misunderstanding that things like this have to be approached where you're doing a rate of change. Exactly. And not, they figure that 25 basis points is, for some reason, everything has to come in these chunks of 25 basis points. And these are people, every time I see like Jerome Powell or any politician, imagine them 5, 6, 7 years old on the playground at school. I always used to imagine George W. Bush in his sheriff's costume with a couple of 6-shooter cap pistols. I'm the new sheriff in town. These people are no more qualified to run the economy than you are or I am, and they're doing it. It's just totally insane.
It is. And Mike, I think you really nailed it by saying it's all about rate of change. And just to try to maybe make this even a little bit more relatable for folks, the way I sort of think about it is if you look at the past rate hike programs that you showed in your first chart there, they all happened over the period of years in general. And the last time that we got up to the 2.25%, 2.5% federal funds rate, like where we are now, that was a multi-year period where now we've just got
2 years. Actually, it took 2 years to get up to from 0.1% to 2.5%.
Right. And we've just made that exact same transition, but just over a couple of months now. And the reason why that's so dangerous is think about a gallon of water, right? If I give you a gallon of water and I give you 2 weeks to drink it, You got no problem with that, right? Easy, right? If I take that gallon of water and I just clamp it to your mouth and force you to try to guzzle it all, I'm going to drown you.
Oh, Joe Miller, you just found the marble in the oatmeal. You're a lucky, lucky, lucky little boy, because you know why? You get to drink from the fire hose! Okay, you ready? Yeah! Open wide!
Right? Yeah. It's all about what the system can handle given the current rate of flow. And right now, what's going on with these rate kites is it's much more analogous to that, gallon of water being forced down your throat right now. And so if you look at your first chart that you put up there again, you'll see that every recession, which is the shaded section, the shaded sections in that chart, was preceded by rate hike campaigns, right?
Yep.
So essentially what we're doing here is we're just doing that progression at warp speed. Right, we're just forcing these rate hikes onto the economy, and we're likely going to enter recession at warp speed and at warp intensity as a result here. And I think that's what most people are not really cognizant of. And in fact, the dialogue that's going on right now about recession is, when's it going to happen or how big is it going to be? The dialogue is, what's the definition of one? And kind of our elected leaders and a lot of the media are telling us, don't worry, because the way in which we currently define recession as of this minute means we're nowhere near one. You've got nothing to worry about.
Right. And this has become something in today's Orwellian society. They just, if they don't like something that is a fact, they figure out how to change the definition so that it actually isn't happening anymore. They basically deny that we're in a recession or going into a recession. And what I am worried about is that we are the economy is this thing that is balanced on a knife's edge, and are we going into a full-blown depression? To me, it feels like we have for years and years, every time there was a crisis, we put, we've got cancer, and we keep on slapping Band-Aids on it. If you blow up a balloon and it develops a pinhole, you put a piece of tape on it and keep on blowing. And you slap a Band-Aid on over here and you keep on blowing. I think that this is going to lead to something really bad. It's going to be different than a regular recession. And we're not coming out of it the same way. And then if we get involved in war, you look at the levels of debt to GDP. And, we're already past World War II levels. We've never been this indebted compared to the size of our economy. And it leaves no room left to react without doing something like printing into a hyperinflation. We don't have the ability to rely on future taxation or raise taxes or whatever to have the expenditures for a war. It's just going to be full deficit spending if that happens. If the economy tanks into a depression or recession, you know what the playbook is from Congress and the Fed. It's just print, print, print. And, that's the reason for me that, for almost, it'll be 2 decades in November. I'll be celebrating an anniversary of when I first started accumulating gold and silver. And several years ago, I became finally comfortable enough to venture into some other investments. But what I've been getting ready for almost 20 years appears to be playing out right now.
All right. And I thought that may be your answer. I'm going to ask the question slightly differently. So you've embarked on this accumulation journey 20 years ago. Given where the world is right now, are you happier or less happy that you made that decision 20 years ago? Sounds like you're much gladder you did.
I'm glad I did. I'm not happy the direction things are going. I think that what the world needs to do is fire all of the leaders. It's not us getting us into trouble. It's them getting us into trouble. And the banking sector, just the fundamental ways we do banking by creating currency that's debt-based and enslaves us in the future. It's a trap that you cannot get out of. It's not possible to get out of it without a complete collapse of the financial system. I am very personally, I feel far less anxiety because of my positions in precious metals. And then, in the past couple of years, I bought some land that where we have our own source of food, water, and I've installed a lot of solar on it. So food, water, and power, I'm completely independent with now. And so these things make me, it relieves anxiety. And so gold and silver are basically, they're almost like an antidepressant or something. They relieve anxiety.
All right. Well, so it sounds like you feel much better about your personal situation because of the decision to make these accumulations, but
but I worry about the world.
You feel much more worried about the state of the world.
Yes. Yeah. And I worry about the average person a lot. And none of this is the people's fault. It's the fault of the hotshot Wall Street elites. There's a J.P. Morgan case right now. They're on trial for the manipulation of precious metals, and Michael Nowak, the head trader that taught people how to spoof and how to manipulate the markets and basically steal hundreds of millions of dollars. That's what they did, and now it's in court and it's being proven that there was a gold manipulation. Now this is manipulation of the short-term prices to basically steal from whoever you're trading with, and it looks like there's already been a lot of guilty verdicts in short-term precious metals manipulation, and now it looks like long-term precious metals price suppression has been more exposed, and as that comes to light, there will be less of it. And so gold and silver are set to explode right now in price. But the thing is that he got to make like $27 million a year stealing from people. And that was part of the financial system. And these people that are running the economy and the people that are on the Wall Street elites believe that they sort of have the right. It's their position in life to steal from everybody else, and it's perfectly moral and legitimate. And
right, and I bet when the verdict comes out and he has to pay his penalty of 1.3 million, he'll cry all the way.
Well, the thing is, there needs to be jail sentences now. This is just something that it is criminal activity that is going on. There probably won't be. J.P. Morgan will pay $100 million fine again, or whatever it is, and get out of it.
Which obviously is a tiny pittance of its annual earnings.
Right. If you commit a crime and you make $1 billion and your penalty is $100 million, what is that an incentive to do?
Right.
The same crime again,
just bigger. All right. Well, look, I want to keep talking about the key element there of your thread, which was the concern for the average investor, the regular person, because they are sort of the unwitting victims in all this. Real quick, folks, if you enjoy these videos with Mike on this channel, please hit the like button and subscribe to this channel. Mike, I want to cite some stats in just a second, but first I want to bring up the chart of the day, which is a chart from Liz Ann Saunders, showing the continued inversion of yield curves. Do you want to comment on the importance of this?
Yeah, I did a video on this last week or the week before, and there's a whole bunch of indicators that have not lined up yet, and they're all things that have to do with the yield curve. There's not just the 2-year and the 3-month that she's pointing out here, but there's also, so if you didn't watch last week's video, the audience here, I suggest going to watch it. It suggests that there might be a little bit more time. I'm not saying that we're not going into a recession. I think we're either in one or we're going into one, and that but there's the Fed funds rate and the 2-year, and there's the 3-month and the Fed funds rate. There's a whole bunch of different ones, and a lot of them have, without fail, since the 50s, gone into an inversion. Some of them have false flag indicators where there is no recession. So, but even those have always turned negative before a recession happens, and they haven't this time. And so, I think that it's headed that direction. That's what her chart says that she's showing. I showed basically, this is a great chart because it's got all of the different inversions. It's got the 10 and the 7, the 10 and the 7 and the 5, and then the 3 and the 2, and the 2 year against the 3 month has is it the 10? I'm not looking at the chart right now.
Yeah, basically all the curves have inverted except for the 3-10 and the 3 month 10-year spread, but it's on its way. It is diving, and
right, and
the current trajectory will get there soon.
That always does invert before the recession starts. So we probably have a month or two, who knows? But I believe that we definitely are going into a recession now. But the question is, will this turn into a full-blown depression? The Fed has they have been extremely reckless. And what you discover is, ever since Ben Bernanke, he's the one that started this, with the bailouts that he did and all of the currency creation of base currency, the funds that the banks use for interbank settlement. So this currency is not currency that the public uses. But with this incredible injection of base currency and the rest of the manipulation of the economy, what you see are all of these aggregates. They took all of their bills, the short-term debt that's less than a year, and they just switched that off. In 2008, all of those bills were gone. And suddenly they're back, and they came back in 2019. So there's the repos. They switch that off and on like a light switch. They're not doing stuff where they're gently dialing things these days. They're in this panic mode. Try this, try that. It's really very scary when you look at these charts that they just switch stuff off and on. It's like they're children doing this. They're poking around in the dark, trying to figure this out, and they're in a panic mode now, and they have been since 2008.
And that's what I think, is the drum that you and I want to be beating here, which is, look, if the airplane you're flying in is encountering, some mechanical trouble and it starts losing altitude, you want your pilots to be honest with you, right? You want them to tell you, hey, time to assume the crash position so that you can take defensive maneuvers. You don't want them to be, serving the drinks and telling you everything's fine if the plane is headed directly into the mountain, right? But that's what we seem to have here, where right now, all of our authorities are telling us, don't worry about recession. The word doesn't even mean what you think it means. But all of these trusted indicators, like the inverted yield curves, are telling us that we're either in it or we're dangerously close to it. And let me just dial through some real world things going on in the world right now. The US GDP has contracted for both Q1 and Q2, which used to be the technical definition of recession until apparently the past week when we're being told it's not. Well, Q3 just started. The Atlanta Fed, which does a real-time forecast of the current quarter's GDP, they started the year at forecasting 2.1% growth for Q3. After one day in August, they downshifted to 1.3% expected GDP growth. So they've already, decreased their GDP growth estimates for the entire quarter by almost 50% after just the first day of the quarter, meaning we're likely to see a lot more downward adjustments, and to see another contracting quarter, probably pretty likely.
That's so that when they announced how bad this recession is and the size of the contraction of that quarter, they're going to keep on doing this, and they're going to say, "See, we weren't far off."
yeah. By the end, yeah, exactly.
Right.
Yeah. All right, but so we have already, a sour growth outlook for Q3 after 2 quarters of contraction. Amazon, one of the biggest employers in the country, they let go 100,000 workers in Q2. We talk about, we haven't really gotten into layoffs yet, but I mean, that's a huge casualty of recessions is all the jobs that are lost. And, right now people are talking about job freezes and, we'll see, maybe there might not, maybe we'll have a soft landing. We'll get out of this without layoffs. Layoffs are already going on here. And I could go through a long list of companies, but I think just this single company laying off over 100,000 employees in just 3 months, that's pretty stark information. Now looking at the housing market, we were talking about China earlier.
That's why it's taking 3 weeks to get a package from Amazon.
Yeah. It's not just the supply chains, it's the fact that they're actually firing people. But in China, which the world's largest asset is the Chinese real estate market, housing starts are down 40% year over year in China right now. I mean, that is a gargantuan and unprecedented collapse in demand. But it's not just limited to China. In the US, we just saw the greatest deceleration in home price growth on record. This news just came out yesterday. That's combined with the largest, what is this? The largest monthly gain in 12 years in inventory. So we are seeing, again, just massive contraction in demand going on in real time right now. Combine that with all the indicators you and I just talked about, yet our elected leaders are telling us, you got nothing to worry about. Like, again, just trying to hammer this home for the average person. This is the time that you should be saying, we look like we're on a collision course with something bad. I should be taking steps in my life to prepare for that. Our leaders are not telling you that, but Mike and I are. This is the time, folks, to be, no one knows exactly what's coming in the future, but this is the time to be doing your, damage control, pre-crisis, pre-emergency preps, because the actions you take today, you're going to have a lot less options if you wait until this stuff hits in full force.
Yes. Yeah, exactly right. You nailed it.
All right. Well, look, I think people are waking up to this. A lot of people who watch these videos are doing so consciously, but I think a lot of people too are just feeling this unconscious malaise, this anxiety in their gut. They know that something's not right. And we got some user feedback recently, Mike, that really put its finger on this, correct?
Yes. Escape the Matrix says, I'm 62 years old, and I know one thing. I've never felt this intense feeling of impending financial and societal doom before. Not like this. I learned long ago to trust my gut feeling. If something feels wrong, it most likely is. And boy, that is exactly the feeling I have. And it's the reason that I've had this feeling. It started 20 years ago, almost, but it's never been this intense before. So I absolutely agree with this guy. And then there's Derek Menser, who says, every recession is different, and no other recession has been preceded by such unprecedented actions by the Fed. My analysis, we're running on the vapors of the Fed spending spree, and a cliff we're going to go over is now in full view just ahead. And these two user feedbacks really sum it up. This is exactly how I feel. And yes, we are running on these vapors, but we've been accelerating. We're going faster and faster. And now we're poking a bear and a tiger with a stick, and we're inside the cage with them.
It's so crazy, but this is where clear sight of what's truly going on is so important. And the realization along with that, okay, the cavalry is not coming, right? Like our government, our authorities, they're not working in our interests here. As you just said, Mike, they're kind of making the situation worse. So it's up to us to be in control of our own destinies here. If we're going to have a good outcome going forward, we're going to have to manufacture it ourselves. And I think that's the spirit of this great quote from C.S. Lewis that you found.
Yes, it's when the whole world is running toward a cliff, he who is running the opposite direction appears to have lost his mind. So I want to thank everybody for watching, and I want to thank you, Adam, for moderating this conversation. It's great.
Always a pleasure, Mike.
Thanks.
At GoldSilver.com, we have a price match guarantee, free shipping, and global storage options. Get the best-selling book, Guide to Investing in Gold and Silver, for free at goldsilver.com.